In its continued efforts aimed at curtailing rising inflationary trend, which currently stands at 21.91% as of February 2023, the Monetary Policy Committee of the Central Bank of Nigeria, at its recently held meeting, voted to increase the benchmark interest rate by 50 basis points, bringing it to 18% from 17.5%, making it the sixth consecutive increase of the MPR, which is the baseline interest rate in the economy. Governor of the Apex Bank, Mr. Godwin Emefiele, while reading the communiqué at the meeting, which happens to be the second for the year 2023, maintains that the slight increase became necessary to mitigate the effects of inflation and other economic headwinds facing the country. To give an expert analysis of this development and its ripple effects on the economy, I'm being joined virtually by the fiscal policy partner and Africa tax leader with PricewaterhouseCoopers, Mr. Taiwo Oyedele. Mr. Oyedele, thank you so much. It's good to have you join us to discuss this very important topic.
Thank you, Tolu. It's a pleasure to be on your program.
Well, the CBN governor continues to maintain that this is the only way we could tame inflation, by increasing rates. But many will say after the increase have started since around, I think, April last year, we seem not to have seen that impacting the figures we're getting from inflation. There is a disconnect somewhere. Please, what's your understanding of this continuous increase in the interest rates while inflation still stays on the high side to you?
Yeah, thank you very much, Tolu. I think, I join, many people who are, in a way, wondering whether this is the right decision to make. And many analysts were expecting that we would maybe at least hold the rate for some times, given that a lot of things happened over the past month or thereabout, which themselves could have fueled inflation. Even if we didn't have the conditions existing before then. And therefore, you need to be able to separate, if you have rising inflation, you have to be able to pin it down to what are really the underlying factors fueling the inflation. So if you read the report of the Monetary Policy Committee, you will see all the analysis from, global issues in terms of new and existing headwinds, including the recent bank failures in the US, in Switzerland, the fact that inflation generally around the world is still high, even though it seems to be receding gradually in some major economies. You still have the Russia-Ukraine war, which is having impact on energy supply as well as food supply, fertilizer to some extent as well, and impacting output and the global supply chain system. And then even the financial crisis, there is a concern about contagion, as well as the rising tension between China and Russia. We still have rates are high in many countries, and especially developed countries, which means that you're not attracting capital into developing countries like Nigeria because they consider your economy to be less safe, and then you see the flights to safety and staying back in the US and parts of Europe. Now, all of that is very commendable. In fact, for the domestic economy, the MPC, as you say, spoke about the GDP rate, which was about 3.1% for 2022, growth being driven essentially by services and agri sector. Moderate input or output recovery, as you say, marginal increase in food inflation. And they also acknowledge that there was, pressure on transportation costs because of scarcity of PMS, as well as still some insecurity in regions where we produce food. They also said that broad money supply has increased, right? Now, if you look at all of these and you then focus on the responses of the Monetary Policy Committee, you begin to ask yourself whether those responses actually address the issues that they have identified. Now, by raising MPR to 18%, which, by the way, is no longer even reflective. So government bond today for 10-year bond is around 13%. Treasury bills is around 4%. So that rate is no longer reflective of interest rates in the economy. So it's almost as if it's a textbook solution to a practical real life problem. So when you say, fuel scarcity due to PMS scarcity is influencing transportation, there's food, supply issues, how does increasing rate further address that problem? I have my own reservation, and my view is that we could have maintained the rate and allowed the economy, because if you take the impact of the naira scarcity that we had to deal with, and the fact that the economy was on lockdown for 2 days during elections, and the fact that even the days after the elections, productivity was low because people were anxious and waiting for the result, it's not the time, because at the end of the day, you may get to a point where you are really, really compromising growth and the economy may begin to, slip into a recession.
As some say, we ought to even wait for some months for the already the implemented increment, that for it to permeate into the economy. Maybe if this would sink, maybe we'll see a difference. Well, that's on one side. The other side is the Naira crunch issue, which I know we must talk about. We still seems to have no headway. The Supreme Court has said all of the notes remain legitimate till the end of the year and still legal tender, but we can't even find the notes. Mr. Idile, it's worrisome. What is happening? I don't know if you have the notes.
No, I wish I have the notes. So I got about 30,000 naira before the scarcity started. This was just, those, I think about 2 or 3 months ago. It certainly was last year. I got 30,000 from the ATM, and I was still complaining because after I got 30,000, they said it was my limit. When the scarcity started, I refused to spend that money. I can tell you that's money I still have with me. I spent 20,000 out of it. I have 10,000 naira left. Now, to even give a tip, I have to think twice. So this is not helping the situation at all. When people have to buy naira to buy goods and services, I don't see anything that is fueling inflation even more than that, because at the end of the day, when you're calculating your consumer price index, you may not have factored in the fact that I have to spend 200 naira to get 1,000 to go and buy food of 1,000. So this inflation may even be worse than what we are reflecting. And the central bank has to find a way to address that problem as a matter of urgency. We have the court decision. It took them a while to even acknowledge it and direct banks to accept the old notes. After doing that, we still haven't seen the supply. If the supply of money, I should say currency in circulation, not the supply of money. If the currency in circulation is still around 1 trillion, and the CBN said we had about 3.2 trillion before this policy was introduced, we still have a gap. And many of us can attest to the fact that even for those who embrace e-payments, the infrastructure has been extremely defective. It has been inadequate. It was not prepared for the scale of what was coming. So ordinary transfer now, sometimes it takes days before you can receive the credit. Imagine standing with someone that you've never met before, randomly on the streets, trying to get, maybe a bottle of water, and then you do transfer and they can't get it. They will allow you go, and you don't have any other money to pay. It can actually really be very embarrassing for the people. So this naira scarcity itself, in my view, has contributed in no small measure to the rising inflation, and therefore raising NPR does not address that problem. What we address it is to make currency in circulation be sufficient for the need of the economy. Bearing in mind also that because of the way this scarcity of naira has been managed or not well managed, it means that when you start releasing currency, people are likely to be hoarding it because they don't know what's going to happen next because of the uncertainty. So you even have to oversupply the currency to be able to at least moderate and normalize, the system before you go back to the level that, you need to be at. So if you take all of that together and also remind yourself that this same government has been doing ways and means when you're asking the central bank to keep funding the federal government, I think recently about 1 trillion naira or thereabouts, this in itself is also fueling inflation. So you cannot on one hand be taking steps that are adding to inflation, And on the other hand, you keep raising MPR, which may then, at the end of the day, make growth very difficult because industries and private sector cannot raise capital for expansion and for their working capital and other businesses.
Well, a layman will want to ask, we've been asked as journalists, what really is the impact of this continuous increase to business people, those that borrow from banks, for borrow manufacturers? What does this mean to them?
Yeah, what it means is when you see the monetary policy rate, it gives you a reflection of the rate at which banks will borrow if they need to borrow from the central bank. It gives you a reflection of how much the federal government will pay for their ways and means, that's the overdraft they have from the central bank. And more importantly, that rate is a signaling rate. It tells you about the direction in which government wants to go. And therefore, as private sector, as individuals, as small business owners, it can influence the rate at which you can borrow. So in other words, if you're unable to borrow at a rate that makes your activities to be sustainable and viable, you will not borrow. And this could also mean that you scale down your activities, including your capacity. And that could mean that when you scale down, you have to let go of people. That can fuel unemployment. Already in a country where we have extremely high unemployment rate, particularly amongst the youth. And it also means that even when you can afford the expensive financing for your business, you have to recover your costs, right? Recovering your costs means prices have to go up. In a way, it then becomes like a contradiction that you are raising interest rates so that you can control inflation, because unfortunately, this inflation is not demand, push. It's not because there's excess money supply. That's not the reason why this inflation is going up. That's what you can easily control with increase in interest rate, particularly in a credit economy where people spend money that they don't have on credit and they pay interest for mortgage and all. That's not the case in Nigeria. So at the end of the day, you may find that we are inadvertently making lives more difficult for Nigerians, making it more difficult for businesses to be able to continue to do their business at scale, and then ultimately stifling the economic recovery and growth in the economy, which is not, I believe, is not what government wants. It's certainly not what the Monetary Policy Committee hopes for Nigeria. So they just have to take a step back and review this, sustained increase in MPR, because over the period when they've increased it by 650 basis points, that's 6.5%, we've equally seen an increase in inflation rate of almost the same percentage, maybe 5 to 6%. So in my view, it's really not working.
What are the quick wins? What's the way out of this? And we also see funny stability in the forex market, talking about the naira exchanging to the dollar. It's been hovering between 740, 750 in recent times, despite the naira scarcity and all we face. It's a two-in-one question. What do you think is responsible for that? And what is your outlook, considering all of these challenges we face as an economy at the moment?
Yeah, that's a good question. FX has a very big impact on prices and therefore inflation, particularly in Nigeria, because we are import dependent. So we always have the pass through. Even if we did nothing wrong, if the Fed in the US is increasing rates, the dollar will strengthen. And that means that even something you bought for $1 before, your naira will depreciate and then it will be more expensive when you get the goods to Nigeria. I do think that some of the, bright spots, if we can sustain the fight against oil theft, and we can improve our production, we can hopefully get to a point where we have more FX supply to be able to defend the naira. We also have to ensure that, even first subsidy, for example, in my view, there's a lot of inefficiency and wastage, such that our daily consumption, in my view, is overstated. Remember when diesel price was deregulated, the volumes, consumption went up by like 50%, so which tells you that there's always a lot of corruption in this kind of arrangement. If you take that out, the pressure on FX will come down, and therefore Naira will stabilize and in fact may even appreciate, such that the imported inflation is reduced and prices of goods and services are better. Government also have to look at the fact that we still have some, border closure issues as we speak. And if you don't have full ability to produce what you need locally, and you don't allow importation, you just increase prices because it's the simple law of demand and supply. In my view, the outlook for exchange rates, now that the elections are over, is, in my view, is going to be determined essentially by what we do with oil production and what we do to our consumption of petrol and the demand that that is placing on our FX. Otherwise, if we're able to address that, I see an appreciation in rates of naira to major currencies. If we are unable to, address that, the size of the foreign reserve has been declining, and that in itself is a problem. If you don't control that, you may then see a further depreciation in the value of naira, which in turn will then fuel further inflation. But I think we wait and see, and hopefully governments will do the right thing, make the right decisions, even when they are tough and they're not, popular. But it's good for the economy in the medium to long term.
I must thank you so much for your contributions as usual on the show. I've been speaking to Mr. Taiwo Oyedele, is a fiscal policy partner, Africa tax leader to PricewaterhouseCoopers. Thank you so much. Do enjoy your day, the rest of your day.
Thank you for having me.